Good morning, everybody. Hey, it is hump day. It is Wednesday here on September 15th. Man, the month is half over, and you're wanting to make money in this market. Possibly you might be having an easy way to make money, or maybe it's been a little tough. For me, it's been kind of an emotional roller coaster. And so, what we're going to talk about here to this morning on my pre-market prep, and because it's a little bit later than normal. Usually I have the video done by this time. So we're going to talk a little bit about my chart setup that I use to and what I look for in the pre-market prep here. And so we'll jump into this video right now here. So, well, y'all should know, if you've been following my videos, you know that I'm not a financial advisor, and I do not give financial advice, nor is anything here to be construed as any type of financial advice. I do not send out trade alerts or send out trade recommendations. You should make your own decisions. You should scan for your own stocks and determine your own entries and exits. These videos are part of my trade journal, as part of my trade journey, and for my own personal review and education. I just so happen to share these here on YouTube. Just maybe y'all can get some entertainment value of this old guy trying to trade stocks and options. So with that being said, let's go ahead and jump into today's video. I always start off with my pre-market prep. This is my trade page with my active trader, and over on the side here I've got 4 charts I typically look at. I keep the skew chart here with a 135 level here, so we've been trading above this 135 for quite some time. I also look at the ticks, and I have the 800 and a negative 800 to indicate, with the zero line being neutral, to give me an idea whether or not the buyers are stepping in or the sellers are stepping in. And then I watch the VIX. I also have here the put call ratio to give me an idea, again, of the ratio versus puts and calls. Most of these charts go hand in hand with one another. And but the ticks and the VIX are the two main things that I watched in the markets to determine. Right now we have volatility running above 19, and so I keep an eye on that. Also, I look at the Qs. I have the Qs up here, and the NQ, actually /NQ is the index that I watch. In the futures, I have the TTM squeeze, and I have the ready, aim, fire. Both of these, this is the ready, aim, fire is from Simpler Trading. It is a paid indicator. Then this is just the free indicator on TOS. The TTM squeeze, they do offer a squeeze pro, but with the advent of the RAF, this kind of I don't right now. I don't see a reason to pay for an indicator here. Then I also have the /YM, which is the mini Dow, and we look at that. I have on these charts here, I have the Keltner channels. I have a 1 ATR, 2 ATR, and 3 ATR Keltner channels. So then I have these up here at the top. These are my indicators, my ADX ATR, which gives me the daily, weekly, and the monthly. I have stacked EMAs, the percentage we are from all-time high, which right now the Dow is 89%, indicating we're 11% away from the all-time highs, so 52-week highs. And on the Qs, we're 6% away. And I also have whether or not on the 60-day channel, how far away we are on the 60-day channel. Then these here, the RSI is important, because RSI, I don't necessarily use the RSI as far as my trading, but I do watch that, and that is correlates here with the ready, aim, fire. The ready, aim, fire gives you a little bit better indication, I think, than just the RSI as far as the overbought, oversold indicator. And then we have the monthly You know, the VWAP here as far as how they're stacked between the day and the month and all that stuff, whether or not they're stacked. And right now, the monthly is is above, or the weekly is above the daily, and the monthly is above all three. So that is really showing a reversal here on the Dow that, you know, potentially we have not found the bottom to the market yet. So in the same thing here, but we're just at the 21. So the Qs are finding their support at the 21, and this white line here on the Keltner channel is the 21 exponential. So that is what I refer to as the mean. So stocks like to return to the mean when they get typically when they get up between 2 and 3 ATR, they are going to revert back to some level of support, and before a continuation pattern continues. And the same thing here on the Russell. You know, the Russell, I have this volume indicator here. For some reason, I can't get it off. I don't know why it's not showing, but it's no big deal. But again, using the squeeze, and which is showing the downward momentum, and we had the down signal here, and playing the short on this here has been, you know, expiring today. Actually looks pretty good here on the Russell, and then we have the S&Ps. So those are the four indexes that I typically use. And then I take a broader picture over here on my chart pattern where, you know, I start with the Dow and I take a look at the Dow on the weekly chart. The weekly chart determines the long-term trend. Sometimes I'll go a little bit deeper and go into a monthly time frame. So we'll pull up and look at a month. If I really want a larger picture here. So we see the month of September, you know, and we can go back. And what's nice about this is we can go back to October. Here's September and October last year. You know, this is what, you know, anticipating this month here to be. And then we go back to September and October. So 2 years ago wasn't quite as bad. I mean, it looks like September, August, and September. You know, August wasn't that great, but then September and October was kind of flat. But again, you know, we can go back, you know, to these other periods of time. The other thing too we can look at here is when we look at the quad witching and the SPX roll and the roll dates, we can go back. So that the other one would have been June right here. And so this kind of shows, you know, what it looked like then. And then we can dive a little deeper in that, and I can look at the time frame here on the weekly and get a little bit better snapshot and just see. We go back to the June timeframe. So that would be right here. So when we had June and those couple weeks in June, kind of shows you what the markets did on a weekly standpoint. And then we can pull back and get a better picture by looking at the daily and coming back to June to get a better snapshot of the pullback in June. So this is what we saw in the Dow during that period of time, which is where we're right now with the quarterly roll dates and everything. So this comes around every 3 months, and so this kind of gives you an idea what we're dealing with. And so this is, you know, when I put my indicator on here from the low up to the high, you know, that's about a 5.53% pullback. And so far we haven't seen that. I don't think we're even at 3% pullback yet. So if we kind of look at this from here to here, yeah, we're just a hair over 3%. So we're 3.15% on the pullback. So potentially, if you use that as a gauge, you know, we got another 2% probably to go before we see the bottom on this, which would put us probably really close to, you know, the end of the week, first of next week. So good time if you're not real sure how to play this, good time to, you know, stay cautious and to continue looking at maybe just staying in cash. But you might say, okay, should I short this market? Well, you know, you look, here's the mean, here's the 21. This could find a bottom any point in time. And so, you know, you could be looking at this right here and saying, okay, here's a potential double bottom. I think if we want to look at a double bottom, I think if we come down here, go from the high and we come down, let's find our 5% mark here. Bingo, right there. So if we draw the line, look right here, 5.59%. So 5.59%, going back to this low here in July, that would probably put us into, a nice double bottom. So if you want to look at that as a nice double bottom on the Dow, and that, that would be that would be a great pullback, and we could make a lot of money going on the upside. So this might be, sit back, enjoy the ride. What we might be looking at in a time frame, if we kind of hold this same, um, this is a 15 bars. Right now we've gone 8 bars. So, probably another week to go. But we might get some pops in that. So that's going to put us, so we're probably looking maybe the last week of September, the 1st of October, before we start seeing a bounce in this and in the market. So that's kind of the way I'm reading this here. So with that being said, you guys have a great hump day trading, and hopefully this has been kind of a little different on the pre-market prep side, and just might want to wait and hold on to your cash, and just be ready for be ready and look for your indicators. And so I'll be watching my indicators, and I'll be watching for some solid entry points and everything in this market. So the structure of the long-term structure of the market is still intact, still very bullish. We're experiencing nothing but a normal pullback on the market. This is not a crash. This is not anything that I think you should be alarmed about, but there is some more downside to come here. But if we can catch some support at the daily 50, but on the S&P, we just might hold this level here. But again, on the S&Ps, when we look at the downside, we're only 2.73%, so we're not even 3% down. So if so there's more to come on this here. So, and that's probably in line with what we've seen in the past as far as the same period of time. So guys, have a great day. We'll talk to you tomorrow.